I'm Corbett Wall with DV Auction, here with your feeder flash for Wednesday, the first day of June, brought to you in part by Vitalix, a high quality, low moisture cooked molasses supplement tub made from the best all natural ingredients available. Remember, fly control can be added to most all of Vitalix's products. Get the blue tub, visit Vitalix.com. Replacing Plainview. And if you hear people, most of the people that are opposing cattle price discovery and transparency bill, they talk about how markets are just cyclical and they come and they go and things like that, and the fact that packers are breaking all-time records of profits almost every quarter, even through a pandemic. They also talk about this all started, and that's not when it all started, but that's when it probably became most prominent, is whenever they closed the XL Cargill processing plant in Plainview, Texas, which is just 60 miles from where I'm at right now recording this. But they closed that in 2013. We enjoyed the big profits of 2014. Of course, that was all a light supply thing too. But you know, that can't be the only problem, is because we've got light processing. We remember whenever we had the plant fire up in Holcomb, Kansas, we thought, oh my gosh, we're never going to get all these cattle processed. We had a bigger federally inspected slaughter every week after that for months than we did before it caught on fire. So, you know, they could turn those things up a little bit more if they wanted to. But, you know, yes, the fact is that we have had more cattle than we had processing space, and to really get the thing rolling good, we have to have big time slaughter and a pretty good Saturday to keep things cleaned up. Well, we're about to get that figured out here. You know, we've had several plants that's attempted to get started, and they're talking about planning stages of getting something going since we had the pandemic and we had such a shortage of workers on the lines, and we weren't able to get cattle processed and all that thing. We've had a few of them that's come on, mostly smaller type operations. I think maybe the biggest one is Missouri Prime Beef near Bolivar, Missouri, and they're rolling. We thought they were going to slaughter more fed cattle than they did cows, but what you hear out of there is more cows than they have fed steers and heifers, but there are some producers that are feeding cattle for them and marketing them through there, and it's going, but it's a fairly small deal. They're not nearly up to where they thought that they might be this far along, and we don't know if that's coming or not. Then we've got the sustainable beef plant in North Platte, Nebraska, which we're expecting sometime next year. I'm not sure if they're on pace for that or not, but that's a $400 million plant with 1,500 head per day expected capacity there. So, you know, that could be something that could add. Then we've got the American Food Group's plant near St. Louis, Missouri. That's a $450 million plant. Expected to be done maybe in late 2024, and they're expecting to harvest about 2,400 head per day. But I'm expecting that that's probably going to be a lot of cows. That's kind of American Food Group's deal. You know, I don't know if they could expect to have many more fed Holsteins. Maybe over in that eastern part they'll have some of those kind of cattle. They may harvest some of those cattle too, but not a lot of commercial feedlots in that part of the country there, and we found out that well, these upstarts find that there's more room in the cows even than there are in the fed beef, especially if you're not able to market all that as efficiently as the big four. But now of late we've got some new plants that are talking about coming on. One that I'm pretty sure will get done, and one that I don't know a whole lot about and would be surprised if it gets done, but they've made a press release. But the one I think that will happen is producer-owned beef in Amarillo, Texas. Now, we've been hearing them talk about this plant for several months here, or about a year, really, and we were expecting it to happen in Dumas, Texas. But now we're hearing that the incentive package from Amarillo was a whole lot better, and they're going to get them a good deal on some land, going to give them tax incentives, things like that, to help them get going. And Amarillo's a bigger community, and so that could happen, and the plant wouldn't be too far from where the Tyson Amarillo facilities that located at. But that's a bigger facility, going to be a $650 million build there, and they're expecting it could be done by sometime in 2025, although they have not broken ground on it. And we're not sure how many that they would harvest today, but we're sure it would, a facility like that would sure be over 2,500 head per day. And then now they've got another one they've just announced. Haven't heard a name on it, but to be built in western South Dakota near Rapid City somewhere, a $1.1 billion plant, which I've got my misgivings about whether that's going to happen or not, and 8,000 head per day. Now, that would be a pretty good trick to get 8,000 head of fat cattle delivered into that part of South Dakota every day, let alone get them in there and get them harvested. But 2025 to 2026. But they made a press release and said that that's in the planning stages, and they've got a location picked out and all that kind of thing. But let's say we get half of these, and I'm sure we will, and I think we'll probably get the first three that I talked about for sure. We're replacing Plainview, all right. But I don't know that it's going to help our cash market. In fact, I don't think it's going to help the cash market at all. Most of them are all, except for American Food Groups, which I told you is probably going to be a high percentage cows and kind of off the market type stuff. But, they're all going to kind of go in the pattern of U.S. premium beef. People that are going to invest in it are going to be able to have shares, and they're going to be able to get their cattle slaughtered in there first, and then others will try to buy in there to get some kill slot space for their own. That's not going to help our spot cash market any at all. But it will take cattle off the market, so if we could preserve this cash market a little bit, and then we got more people that had the balls to sell their cattle in the cash market and negotiate it, and weren't too lazy to price the cattle and negotiate on them, then they would definitely have the upper hand, especially as we go through these tight supplies that we're expecting for probably the next 3 years, if we get any of those plants opened over the next 3 years, which they are expecting to. But most of them's going to go in that pattern of U.S. premium beef. We hear all these great things about U.S. premium beef. I told you before, the U.S. premium beef, the main reason it's really worked is because they partnered up with National to get that deal done. And they can help them with the marketing and all that. And then that fills so much of National's slaughter space there for that facility. And it works pretty good, especially if you had a dad that invested in that when it first got started, and you got a whole desk drawer full of shares for that, and they've traded, and they've gotten to where they're a pretty handsome price there. So that's worked out for those guys. And if you have been handed a deal like that, yeah, it's kind of hard to beat there. But these plants will take cattle off the market. I just worry about their back end of the plant working that, and how they're going to market their offal, how they're going to market their meat, how they're going to compete with the big four when they get to these big supermarkets and they get to the Walmarts. Of course, they've all got sweetheart deals with these big packers too. And then we got a new plant that's wanting to find a market there. Sure, a lot of them will have specialty type places that they can sell, but if they want to go into a big time corporate supermarket, how's that going to work? It's going to be hard to break into. We've already seen that with my friends, the Herzogs there in Butler, Missouri, as they started getting into the Hy-Vee markets in Kansas City. And man, people really liked their product, and they started moving to more and more Hy-Vee supermarkets. And then pretty soon they got a call from their big four supplier. The supermarket did, and said, "Hey, that's my meat counter. Don't be letting some little guy come in there. He's starting to step on my toes a little bit. That's not going to fly. And so then they had to shut them off. So that's just going to happen as they go further. And what I hope doesn't happen, and I fear that could happen, but I really hope that it doesn't happen, that within 5 years of getting started, that they don't have to sell these new facilities to one of the big fours for pennies on the dollar. And, especially after they take the government incentive money to get them built and all that kind of thing. Yes, there's a way to get that done, and some of the bigger ones there that know what they're doing, they've already got teams that have experience, marketing at a corporate level, but it's a dangerous situation there. Wish the best to all of them and everybody that's putting in smaller facilities, but on Tuesday, to start the week, because we had Memorial Day, commodities were down hard. And not just your cattle, your grains were all down hard. Everything except for fuel was pretty much down hard. And I expect it'll probably bounce back right here getting started. But we heard news over the holiday weekend that some of these economists think that we're already in a recession. Because we've been looking that we were kind of on the verge of it, but they're saying we already are in a recession. It's hard to know what they feel like, but I tell you what, everything you buy costs so damn much that it hurts anybody. I mean, anybody's get feeling the brunt of it, whether you got a business or you're just dealing with your personal expenses. But it's quite a deal. But post Memorial Day to start the week was a big downer on your commodities. Talk about your board. June live cattle futures down $1.65 at 130.52. Just clinging to the 130s, guys. August down 202 at 130.37. So now it's trading back under what your June is. Of course, your cash market, and it's June now, is trading at a big premium to what the board is. And if the board can't replicate or can't come together or meet up with the cash market, especially when you're within the spot month, what the hell good is it? I know everybody's enjoying that because they get the big basis, and we saw basis jumpers on Tuesday to start the week in the Southern Plains, puking cattle $2 lower at 135 because they're chasing that basis. And they figure they're going to have to give up ground anyway, so why not be the first ones to do it? Wish they would advertise the folks that did that, and they could be proud of it. But that doesn't ever seem to happen. But your back months on live cattle futures were down 20 to down $1.90. August feeder cattle down 120 at 165.12. September down 117 at 168.12. Back months on feeder cattle down 115 to down $1.37. Told you grains were down. They were down hard. Corn down 23 3/4 cents, and spot feeder cattle down $1.20. That doesn't hardly seem fair, but corn down 23 3/4 cents. Closing regular trading at 753.5. Beans down 49 cents at 16.83 1/4. Kansas City hard red winter wheat down 69 3/4 cents. Ouch. At 11.65.5, which still seems astronomical. Weighted average on last week's negotiated fed cattle trade in your 5-area feeding region. Disappointing volume at 68,700 compared to the fairly disappointing week before at 77,900. And a disappointing one a year ago this week at 74,300. Talk about your cash prices. The little bit of trade on Friday didn't change anything from what I gave you on our last visit, but live sales steers and heifers in the 5-area feeding region ranged from 136 to 144, which was just steady to $1 lower on your price spread, but your weighted average was $1.18 lower than the previous week's weighted average, sitting at 139.07, with the north trading at a big premium and the southern plains at 137 and north at 141 or 2, and it come together at just over 139. Dress sales, steers and heifers from 222 to 228. Now that was $3 lower on the bottom side of that price range, or $3 higher on the bottom side of the price range and $1 lower on the top. But your weighted average on dressed steers was down 181 from the previous week's dressed weighted average at $223.99. Nationwide, didn't sell hardly any cattle at all outside the 5-area feeding region, only 10,000 more. So 68,700 in the 5 areas, 78,600 in the whole nation. You know, that includes South Dakota, Wyoming, Illinois, you know, places like that, plus Pennsylvania and Washington and all that. Just hardly any negotiated sales, and that's what I'm talking about, some negotiated sales in the 5 area. Negotiated grid, 42,600. There's not much negotiation of that. Saw a negotiated grid contract here early in the week, and it sure doesn't look like there's a whole lot of negotiating in it. Just sign your cattle up with us, basically what it should be called. Forward contracts for 15,000, which they're normally pretty light. Formula, and this is our problem, guys. I've told you how menial our negotiated trade is, and then formulas for last week, going into a holiday week, 264,800 head, and people just don't want to give that up. I guess they want to build more on it. But of your negotiated sales, 31% of those were for the 15 to 30 day delivery, so they're still pushing for that. Going to try to whittle this cash market down to nothing before we get to the end of the summer or early fall and start trying to get it back with lighter show lists. But I told you we had some Kansas 400 head and Texas 900 head. Basis jump at 135 on Tuesday. That sure doesn't set everybody else up very good for a good negotiated trade this week. Box beef cutout values were higher. Choice cuts up 212 at 267.54. Selects up 215 at 248.65. Talk about your feeder cattle market. Your real-time index on DV auction late in the day on Tuesday said at 155.28, up 15 cents, and has ran way past your CME cash feeder cattle index, which is the latest available, sitting at 153.22. It's almost $2 behind there, but they'll be catching up, and they'll be up some and get in there pretty tight. Talk about your sales on Tuesday. Just had basically Russell, Iowa's the only sale on Monday to speak of, and didn't have too big of runs on Tuesday. Ozarks Regional Stockyard in West Plains, Missouri had 1,700 head, which is a very light run for them. Another nearly 400 on their in-house video auction they do with help from DV Auction there. Calves there in a light test sold $3 to $6 lower. Beaver County Stockyards had a pretty good sale. Individual quote from them, some mixed yearling steers, 57 head of them, weighed 833 at 160. Kimball Livestock Exchange up in Kimball, South Dakota sells big cattle pretty good. How about 60 head, 987 pound steers, scaring the hell out of 1,000 pounds at 147.10. With today's cost of gains and the look of when those cattle might be ready, this deal's going to have to come back pretty good there. They better start stealing gas to put in a feed truck if they're going to keep the cost of gains down on those. How about Rezac Livestock Commission in St. Mary's, Kansas? 61 head, 848 pound steers at 162.75. But the best quote that I saw anywhere on Tuesday in your National Beef Wire, top quote for the day, come out of Unionville Livestock Market in Unionville, Missouri. That's extreme north central Missouri right there. We've talked about it many times before. The Rock and R outfit, they background cattle up there in Lucerne, Missouri. They had 416 head in Unionville on Tuesday, 7 straight loads of them, all good black steers there. Average weight on them was 887, average price 162.90. That's your feeder flash for Wednesday.